Assalamualaikum and hi to my fellow friends and Dr. Faru. We are from Group 3. So the topic that we will present today is regarding Chapter 4, that is Employee Benefit and Retirement Plan. So before start our presentation, we will introduce ourselves first. So my name is Umurazika binti Muhammad Maidin and my matric number is 067297. Next presenter. Okay, I will start with the introduction first. Page slide introduction, please. Okay, first is the definition. So what is employee benefit? Employee benefit include the director and other management personnel. According to MFRS 119, is applied to all benefit except those which MFRS 2 share-based payment apply. Next. So there is 4 category of employee benefit. The first one is short-term employee benefit. Second one is post-employee benefit. Third one is other long-term employee benefit. And the last one is termination benefit. I will explain one by one in next slide. Next. So the first one is a short-term employee benefit. Short-term employee benefit such as the following. For example, if you settle wholly before 12 months after the end of annual reporting period in which the employee render related service. For example, wages, salary, social security contribution, paid annual leave, paid sick leave, profit sharing and bonuses. And other than that is non-monetary benefits such as medical care, housing, car, free subsidies, goods and service for current employee. Next. Next is post-employment benefit. Post-employment benefit are employee benefit, which is termination benefit and short-term employee benefit. They are payable after the computation of employee benefit. For example, retirement benefit, pension, and lump sum payment on retirement, post-employee life insurance, and post-employee medical care. Next. Next is other long-term employee benefit. Other long-term employee benefit refer to all employee benefit other than short-term employee benefit, post-employment benefit, and termination benefit. For example, long service leave, jubilee or other service leave, or long-term disability benefit. Next, the last one is termination benefit. Termination benefits are provided in exchange for termination of an employee employment as a result either of an entity decision to terminate an employee employment before the normal retirement date, or an employee decision to accept an offer of benefit exchange for the termination of employee. So next is short-term employee benefit. Next. So first is basic principle. So according to MFRS 119, is generally based on the following principle. Liability, accrue expenses after deducting any amount already paid. then as an expenses unless other IFRS require or permit the inclusion of the benefit in the cost of NSF. So this is the example we got from the textbook, page 142. So there's an example you guys can refer. Next. So next is pay annual leave. Some company allow their employee to roll over any unissued annual leave to the following year. In such case, the company must recognize liability for the monetary value of this unused leave and expenses. This amount in the period the leave is accrued but not taken. This means more money. Sorry, this is more money for the employee as the maybe pay for the unused leave. So there is example you guys can refer from same page 142. These are the examples. Next, the last one is profit sharing and bonus plan. Yeah. Under some profit plans, employees receive a share of profit only if they remain with the entity for a specific period. An entity shall recognize the expected cost of profit sharing and bonus payment when the entity has a present legal or consecutive obligation to make such payment as a result of past event. Another reason is a reliable estimate of obligation can be made. So there is an example too for that. One page 143, you guys can refer. That's all for my part. I will pass to the next presenter.
Hello, dengar tak? Hello, my name is Najah Raihana binti Nazri. My metric number is 067035. Now I will explain about post-employment benefits. Post-employment benefits plans are classified as either defined contribution plans or defined benefit plans. Firstly, defined contribution plan. An entity pays fixed contributions into a separate entity which is a fund and will have no legal or constructive obligation to pay for the contributions. This means the risk is borne by the employees as they have a free choice of investment and thus solely bear the actuarial and investment risk. The accounting treatment for a defined contribution scheme, it is a fairly simple since the employees um, related to the scheme for that period. Gains or losses able at the end of it. This amount if the employer has made payments in excess of the required amount. Tak dengar ke? Dengar tak?
Tadi sekat-sekat, sekarang dengar.
Okey. Sampai mana tadi?
Sampai definition dengar tadi.
Definition yang accounting treatment dengar tak?
Tak rasanya.
The accounting treatment for a defined contribution scheme, it is a fairly simple since the employee's obligation for each period is determined by the amount that has to be contributed to the scheme for that period. And actuary's advice is not needed. Thus, calculation for actuarial gains or losses are not necessary. The employer recognizes the contribution payable at the end of each period based on each employee's service during that period. This amount is reduced by any payments made to employees in the same period. If the employer has made payments in excess of the required amount, this excess is treated as a prepayment. Discounting is not needed as amount is payable within 12 months. The contribution is measured at present value of money. Usually the contribution amount is paid in the following month. However, in a rare case, it may take more than a year to settle outstanding amounts during financial distress. As the contribution expenses is related to employee compensation, it will be treated as an operating expense and thus deducted in calculating net income in the income statement. The expense is very similar to the accounting treatment of salaries. Next, defined benefit plans are post-employment benefits plans other than defined contribution plans. Defined benefit plans are post-employment benefits that may be unfunded or may be wholly or partly funded. Benefits may be in the form of cash payments or could be in kind in terms of medical or other benefits. Defined benefit plans are costlier for employers than defined contribution plans. Accounting for DBP, actuarial risk and investment risk fall in substance on the entity. In a funded scheme, the employer contributed to a separate entity. This fund then pay the benefits. The payment of benefits depend on the fund's financial position and the performance of its investment. Plan assets are available to be used only to pay or fund employee benefits. They are not available to reporting entities' own creditors, even in the case of bankruptcy. If the actuarial or investment experience is worse than expected, the entity's obligation may be increased. This means that the employer undertakes the risk of providing the required funds to meet the obligations relating to the benefits to current and former employees. Discounting is needed as the pension scheme is payable after retirement. Thus, the measurement and recognition for defined benefit plan is more complex compared to defined contribution plans. Accounting for DBP is quite complex and involves the following step. First, step 1, defined benefit obligation (DBO). Note that there are two main accounts presented in the SOFP as net defined benefit liability or asset, which is the net total of uh, defined benefit obligation, pension obligation, and second is plan assets. If the DBO less than PA, it means surplus subject to asset ceiling test. The net defined benefit assets will be recognized under non-current asset in the SOFP. If DBO is more than PA, it means deficit. The net defined liability is recognized under non-current liability in the SOFP. Step 2, plan assets are prepared simultaneously. Step 3, prepare the extract of statement of profit or loss and other comprehensive income. Determine the amount to be recognized in the SOPL, which is current service cost, past service cost, and net interest expense income. For the step 4, prepare the extract of SOFP. Next, is past service costs. Past service costs arise because of an improvement to the pension scheme, plan amendment, or curtailment. It signifies the additional cost and liability in respect of employee services in previous year, which means the revision is backdated to the time which employees were originally introduced to the scheme. Past service cost is recognized immediately in profit or loss. A liability and expense for the past service cost is recognized at the earlier of the date the entity can no longer withdraw the benefits or offer, and the date the entity recognize restructuring costs under MFRS 137 provisions, contingent liabilities and contingent assets. That is example for the pension plan at the page 152. Okay, that's all from me. Thank you.
Assalamualaikum and hi. My name is Nadatul Amira binti Aziz. My matric number 065458. Okay, next I will explain about asset selling test. The asset selling test is applied if the net balance in the statement of financial position SOFP is a surplus on net defined benefit asset. Dengar tak?
Yeah.
Okay. It is surplus where the net asset exceed the defined benefit obligation. Dan aset bermaksud investment yang disimpan sekarang sebagai pension plan untuk diberikan bila employee pencen. Dan defined benefit obligation bermaksud the total amount the company expect untuk bayar kepada employees in the future. So, bila investment yang disimpan melebihi expectation duit yang perlu keluar, so we call it as a surplus. This test ensures that the surplus amount reported on the company's balance sheet is not overstated. The test use two criteria and must select the lower value. First, the surplus amount shown in the pension plan. Second, the present value of the economic benefits in the form of refund from the plan and a reduction in the future contributions. The company can refund from the plan, means company akan dapat semula berlebihan daripada pension plan. Or reduction in the future contribution bermaksud company dapat kurangkan amount investment dalam pension plan because the amount yang company set aside setiap tahun dah melebihi amount yang diperlukan untuk bayar employee yang akan retire in the future. Next slide. So the example of asset selling test, you can refer to page 155. An oil and gas entity has these balances relating to its defined benefit plan. First, present value of the obligation is 34 million ringgit Malaysia. Fair value of plan asset is 39 million ringgit. In this example, the present value of economic benefit, which is 2 million, is lower than the surplus calculated 5 million ringgit. So, surplus yang perlu dikenas hanya 2 million sebab we choose lower value. Dan berlakunya reduction dalam reported plan asset sebanyak 3 million ringgit. Untuk journal entry bagi reduction ni perlu debit ada comprehensive income 3 million ringgit and credit plan asset 3 million ringgit. Next, projected unit credit method. This method used to determine the present value of a company's pension obligations. These obligations are based on the estimated future benefits that employees earn each year until they retire. So the purpose of PUC method is to allocating costs. The method nak memastikan setiap tahun cost of pension benefits direkod berdasarkan unemployed service. This means each year, sebahagian pada total future pension liability direcognised as a current expense. Second, discounting cost. Future pension payments are discounted to their present value. This involves calculating berapa banyak yang perlu disimpan hari ini untuk memenuhi pembayar pencen masa depan dengan mengambil kira the time value of money, which in money today is worth more than the same amount in the future due to its earning potential. So the example, next slide. Okay, this is an example of projected unit. You can refer to textbook page 157. Here I will just explain a bit about the solution. First, determine the current service cost. For example, in year 3, the salary is 300,000 ringgit and the retirement benefit percentage is 10%. So, 300,000 ringgit times with 10% equals to 30,000 ringgit. This is the amount that employee earned for his service in the current reporting period. Next, calculate the interest cost. The discount rate is 5%, then times to the current service cost. And lastly, you need to measure the present value of pension obligation. Untuk measure present value, perlu ada amount current service cost and discount rate. The journal entry is debit expenses in profit and loss and credit pension obligations. So the differences between asset selling test and projected unit credit method ni, asset selling test lebih kepada untuk menentukan limit nilai aset yang perlu dikenas dalam report. Projected unit credit method menentukan berapa yang akan diterima oleh employees pada masa hadapan bila pencen. So that's all for me. Lepas to the next presenter.
Hi, my name is Nurul Izzah Diroswadi. My matrix number is 067318. I will explain about curtailments and settlements. Curtailment occur when there is significant reduction in the number of employees covered by the plan. They are likely to have significant impact on the entity's financial statements and often linked to structuring and reorganization. This gives rise to a past services cost and is brought in when the related termination costs or benefit are recognized or when the curtailment occur. Next is settlement. Settlement is usually lump sum cash payment made to or on behalf of plan participants, which are employees, in exchange for the right to receive post-employment benefit like pension plan. The gain or loss on a curtailment or settlement recognized in profit or loss as part of service cost, including any changes in the present value of the defined benefit obligation or any resulting change in the fair value of plan assets. The next one is termination benefit. Termination benefit liability occurs in two situations. Firstly is when the entity can no longer withdraw the offer of those benefits. This happens once the entity accepts an offer of benefit in exchange for termination of employment. In addition, if there is any restriction on the entity's ability to withdraw the offer tax effect. The second situation is when the entity recognizes a provision for restructuring costs under MFRS 137, which involves the termination benefit. That's all for me. I pass to next presenter.
Assalamualaikum and hi. My name is Faiza Suaida binti Muhammad Isa and my matric number is 067616. I will explain on the disclosure and MFRS 126. Now let's move to the disclosure objectives outlined in MFRS 119 regarding the defined benefit plans. let's start with the first objective, which is objective A, focuses on ensuring that stakeholders grasp the essence and risks associated with an entity's defined benefit plans. This entails a detailed explanation of plan characteristics such as employee demographics, investment strategies, and regulatory factors. Moving on to objective B, it emphasizes the identification and explanation of financial statement items influenced by defined benefit plans. This includes breaking down components like service costs, interest costs, and remeasurements, offering stakeholders a clear understanding of their impact. Lastly, objective C is on how defined benefit plans affects an entity's future cash flows. This entails describing how these plans may influence the amount, timing, and uncertainty of future cash flows. This analysis considers factors like funding requirements and the impact of various actuarial assumptions. In summary, these disclosure objectives ensure transparency and understanding regarding defined benefit plans, enabling stakeholders to make informed decisions about an entity's financial health and future prospect. Next slide. Next is MFRS 126, which is about accounting and reporting by retirement benefit plans. MFRS 126 primarily focuses on how retirement benefit plans account for and report their financial activities to all plan participants as a group. However, it's important to note that this standard doesn't cover reports directed to individual participants regarding their specific retirement benefits. This standard works hand in hand with MFRS 119 employee benefits, which specifically addresses how employers determine and report the cost of retirement benefits in their financial statements. Think of MFRS 126 as the other side of the coin, focusing on how retirement benefit plans themselves handle their accounting reporting. Now let's talk about the objective of MFRS 126. The main goal of MFRS 126 is to provide clear guidelines on how retirement benefits plan should measure and disclose their financial activities. Regardless of the type of plan, there are key components that should be present in their report. Next slide. This component include a statement of changes in assets available for benefits, a summary of significant accounting policies, and a description of the plan itself, including any changes that occurred during the reporting period. Understanding key definition is essential for grasping the intricacies of retirement benefit plans. A retirement benefit plans is simply an arrangement by which an entity provides benefits to employees after their service. Within this realm, there are two main types of plan, which are defined contribution and defined benefits. In a defined contribution plan, benefits are determined by contributions made to the plan, along with any investment earnings, whereas in a defined benefit plan, benefits are based on a formula typically tied to employee earning. Now, for defined contribution plans, the financial statement should include a statement of net assets available for the benefits, along with a description of the funding policy. This provides stakeholders with a clear view of the plan financial health and how contributions are being managed. Meanwhile, in the defined benefit plans have specific reporting requirement. They can either present a statement showing net assets available for benefits alongside the actual present value of promised retirement benefits, or they can refer to this information in an accompanying actuarial report. Additionally, there are detailed disclosure requirements regarding actuarial assumptions and the method used for calculation, ensuring transparency and understanding. So for better understanding, you guys can refer to textbook from page 163 to 170 on how this standard is being used in the financial statement. I think that's all from me. Thank you.
Okay. Thank you for your presentation. Okay, ada apa-apa nak tanya? Okay, saya nak tanya satu je. Macam apa retirement benefit ni, dia untuk swasta ke ataupun untuk government punya sektor? Okay. Cepat nak ada grup lain tak nak berikan. Apa yang awak faham lah dalam apa presentation tadi. Maknanya dia mau kepada swasta punya ni ke ataupun government punya sektor. Okay, siapa boleh jawab? Tak ada eh?
Sekejap, saya tengah fikir.
Sebab dia melibatkan aset semua-semua tu kan. So maknanya dia mau kepada swasta lah. Tapi ada part yang awak mention pasal apa, mau kepada macam apa, saya still lah sebab takut lama sebab ada duduk lagi. So mana dia ada part yang awak explain mau kepada apa aset yang kita nak cover based on apa investment on asset semua tu, dia mau kepada private sector lah. So kalau ikutkan kalau awak tengok sekarang tak nampak sangat lah sebab kita mau kepada kalau apa kalau awak tengok sekarang private sector dia mau kepada KWSP kan. So makna dia kalau pension punya ni mungkin ada benda tu tapi awak kena google lah. Saya pun tak tahu company mana yang buat pension scheme tu untuk private punya company lah. Tapi ada benda tu. So kalau awak nak further information about the pension tu mungkin awak boleh ni lah boleh google syarikat mana yang tawarkan. Tapi biasanya susah lah nak jumpa syarikat yang tawarkan untuk pension punya ni kecuali lah government. Government pun sekarang pun dia dah nak terminate pension punya ni tapi dalam still lagi dalam perbincangan lah. Which is makna dia sekarang ni untuk pension punya insentif tu dia macam more kepada memang dia akan benefit kepada employees kan tapi dia macam menjadi beban kepada employer pula. So apa yang present tadi adalah untuk cara kita nak record the way of retirement punya ni lah. So dalam IMPAIRMENT dia discuss benda tu. So ada apa-apa nak tanya pasal this topic? This topic tak masuk final ya. Ada yang tanya? Kalau tak ada nak tanya, we proceed to our next presentation. Okay, group satu lagi. Ada dua kan? Earning management. Earning management dengan impairment ada ke? Impairment of goodwill. Jadi dia tak masuk. Oh. Jadi dia tak masuk dengan earning management. Okay, dia proceed lah.
Hello? No. Okay. Assalamualaikum and hi everyone. So for our group today, we'll be presenting on the topic of revenue recognition issues. So first, our group First, our group consists of 5 members, which is Teo Ruen 067763, Nur Shahira 067801, Parvata 067815, Azra Khan 068780, and Nur Ashika 068797. So for our topic, we'll be explain to you about revenue recognition, new revenue recognition standard, recognition and measurement, types of contract cost, other revenue issues, and disclosure requirement. Okay, first I'll be explaining to you the introduction to revenue recognition. So revenue is like when a company makes revenue, it either gets more money or its asset increase, so which boosts its overall value. Tapi dia ada tricky part which cara how bila dia nak decide nak record this money as revenue in the company's books. So actually there are rules for this, which is IASB, International Accounting Standard Boards, and MASB, Malaysia Accounting Standard Boards, where they adopted new revenue recognition standards called MFRS 15. So this revenue helps company decide when to recognize the revenue, and also these standards replace all the rules like those for construction contracts or loyalty programs. So this, as stated, this new standard is effective from 1st January 2018. Tapi kalau diorang nak adopt lagi awal daripada tarikh tu, is permitted. So the main aim from this new standard is to make sure that companies report their revenue consistently and accurately, and so investors and others can trust their financial statements. So MFRS 15 supersedes, which is they replace previous revenue recognition standards, including MFRS 111 construction contracts, IC Interpretation 13 customer loyalty programs, MFRS 118 revenue, IC Interpretation 18 transfers of assets from customers, IC Interpretation 15 agreements for the construction of real estate, IC Interpretation 131 revenue barter transactions involving advertising services. So next is the revenue recognition standards MFRS 15. So MFRS 15 ni is a new set of rules for how companies should record and measure their revenue. And macam yang sebut tadi, MFRS 15 ni dia replace all the rules. So these new rules dia apply untuk semua revenue that comes from contract with customers. And contohnya macam company yang jual goods or services to customer, so diorang kena follow these rules of MFRS 15. So impact dia akan affect many industries like construction, real estate, software and many more. And macam berapa banyak dia affect company tu depends on their relationship with customers and how they currently handle things like inventory. Contoh kalau diorang untuk previous standards pun diorang dah tak follow sangat rules, so bila masuk MFRS 15 ni untuk new standard, so impact dekat diorang tu besar lah. So next untuk figure ni ada dalam buku teks. So figure ni dia macam explain, dia suggest that finance and accounting are intertwined and touch many aspects of a business. Next is objective and principles of MFRS 15. So the objective is the primary objective is to provide users of financial statements with useful information about the nature, amount, timing, and uncertainty of revenue and cash flows arising from contracts with customers. So it aims to enhance transparency and comparability in revenue recognition practices. So maksudnya objektif dia supaya company boleh can easily see how much money they are making and how they are sure about it. So everyone, which is stakeholders, diorang boleh understand, boleh dapat better understanding, dan diorang boleh compare disclosure yang company tu bagi dengan company lain. Then dia boleh bantu investors untuk buat better decisions. So principles, untuk principles ni, MFRS 15 establishes a comprehensive framework for determining when revenue should be recognized and how it should be measured. Revenue is recognized when control of goods or services is transferred to the customer based on the amount of consideration expected from the customer. The standard emphasizes the concept of transfer of control rather than transfer of risk and rewards. So focusing on when the customer gains control of the goods or services. So untuk standards lama, diorang guna transfer of risk and reward, risk and reward. Dan untuk MFRS 15 ni diorang guna the concept of transfer of control. So contoh dia macam cara company handle extra cost. Dia macam bila contoh company tu jual setahun punya subscription untuk magazine RM120. So setahun 120 tu kalau kita bahagi dengan 12 bulan, kita akan dapat RM10 untuk sebulan. So RM10 tu diorang akan record as asset untuk setiap bulan instead of diorang record as a whole. So transfer of control dia, diorang akan record RM10 tu selepas subscription of magazine tu diorang dah, customer dah dapat. Maksudnya lepas customer dah dapat subscription tu, baru diorang record RM10 tu sebagai diorang punya asset. So kalau contoh untuk yang lama punya transfer of fees or rewards, RM120 tu diorang akan record as a whole terus. Dia akan record secara keseluruhan even sebelum customer tu pun, even sebelum customer dah dapat barang tu, diorang dah record. Tapi untuk yang MFRS 15 ni, diorang record selepas customer dah dapat barang tu. So last, scope of MFRS 15. So MFRS 15 di-apply untuk semua contracts with customer kecuali untuk lease contract within the scope of MFRS 117 leases, insurance contracts within the scope of MFRS 4 insurance contracts, financial instruments and other contractual rights within the scope of various other standards and non-monetary exchanges between entities in the same line of business. That's all from me. I'll pass to the next presenter. Thank you.
I'm going to present about recognition and measurement. Boleh dengar tak?
Boleh.
Okay. The new model of revenue recognition will be applied using a 5-step model. The revenue standard focus on the performance obligation in the contract and allocating a transaction price to those obligations. The new requirements for revenue recognition are based on a core principle and applying 5-step model. The first step is identifying the contract with the customer. Second is identify the performance obligation in the contract. Third is determine the transaction price. Fourth is allocate the transaction price to the performance obligation in the contract. 5 is recognize revenue as performance obligation are satisfied. Next. Okay, the step 1. Identify the contract with the customer. It is essential to fulfill the specific requirement in order to conclude that the agreement entered with the customer are contract within the scope of the model in the standard. Contract has been approved in written, orally, or customer business practice. Each party rights can be identified. The payment terms can be identified. The contract has been commercial substances. It is probable that the consideration will be controlled. Combination of contract. The contract are negotiated as a package with a single commercial object. The consideration for each contract is interdependent on the others. The good or services of the contract represent a single performance obligation. Next. Contract modification. Accounted as a separate contract if and only if the contract scope has changed and additional good and listed, the change in contract reflect a stand-alone selling price. Contract modification that is not separate contract, a replacement of original contract, continuation of original contract, and mixture of both. Next. Step 2. Identify the performance obligation. The performance obligation within a contract encompasses both explicitly and implicitly promised goods and services, which may consist of one or more obligation. Entity shall access the good or services promised in a contract with the customer and shall identify as them performance obligation. A good or services that is a series of listed good or service that is substantial the same and that have the same pattern to transfer the customer. Next. Step 3. Determine the transaction price. The transaction price is the amount of consideration in the contract to which an entity expects to be entitled in change for transferring promised goods or services to a customer and consists of a fixed amount of customer consideration, variable consideration, consideration in form other than cash. Variable consideration. Variable consideration include all amount that can change based on contracts such as performance bonus, penalties, discount, rebate, price concession, incentive, and the customer's rights to return product. Consideration payable to the customer include cash to the customer as well as credit or other items, coupon or voucher. Next. Allocate the transaction price to the performance obligation. Allocate the transaction price to performance obligation in the amount and dispute the amount of consideration. It is necessary to allocate the transaction price to each of the performance obligation. It is a contract contain more than one performance obligation. It is based on allocation based on stand-alone salary price, allocation of discount, variable consideration, consider any changes in transaction price. Next. Step 5. Recognize revenue when the entity or as an entity satisfy performance obligation. Performance obligation are settled by transferring a good or service to the customer. The revenue recognition is the amount allocated to the satisfy performance obligation. Over time, performance create an asset and enhance as asset that the supplier working on where the customer is in control of asset. Performance does not create an asset where the supplier can use for their own purpose or sell to another. Point on time. If a performance obligation is not satisfied over time, entity can satisfy at point in time. Shall consider indicator, entity has present right to payment for asset, customer has legal title to the asset, and entity has transferred physical position of the asset. Next. Okay, ni macam contoh. Assume that Airbus Corporation signed a contract to sell airplane to Cathay Pacific for 100 millions. Next. Okay, the first step. A contract is an agreement between two parties that create enforceable rights and obligations. In this case, Airbus has signed a contract to deliver aeroplanes to Cathay Pacific. Step 2, Airbus has only one performance obligation to deliver airplanes to Cathay Pacific. If the Airbus has also agreed to maintain the airplane, a separate performance obligation is recorded to this promise. Step 3, transaction price is the amount of consideration that the company expect to receive from a customer in exchange for transferring a good or service. In this case, the transaction price is straightforward, 100 million. Next. Step 4. In this case, Airbus has only one performance obligation to deliver aeroplane to Cathay Pacific. Step 5. Airbus recognized revenue for 100 million for the sale of the aeroplane to Cathay Pacific when it satisfies its performance obligation, the delivery of the aeroplanes to Cathay Pacific. I'll pass to my next presenter. Thank you.
Okay, I'm Parvada and I'll be explaining about the contract costs. So as an overview, there are two types of contract costs, which is incremental cost of obtaining a contract and cost to fulfill a contract. So these two costs, how they are amortized and how the impairment is tested on the recognized asset. So these are the overview. And I'll start with the first type of contract cost, which is incremental cost of obtaining a contract. So incremental cost is the cost that occur only if a contract is made with the customer. The incremental cost must be recognized as asset if they are recoverable ataupun like claimable. So for example, sales commission. I will give a simple example. When a salesperson able to make a contract with customer, he will receive commissions. So the commission paid is called incremental cost and the cost is recognized as asset. Ataupun, when the customer renew a contract, the commission will be paid to the salesperson. So the commission paid is considered incremental cost. There are also non-incremental costs, which will be expensed off unless they are explicitly chargeable to customers or like recoverable. For example, like proposal, sales and marketing costs, advertising costs, legal costs to pursue a contract, fixed salaries of employees. These are all called non-incremental costs because the company will still incur this cost even if they did not obtain a contract. Like salaries still paid regardless of whether a sale is made. So explicit chargeable expenses. I will give a simple example what it means. For example, a salesperson spends 10,000 travel expenses to meet a customer to secure a contract. So if the customer agrees to pay back for the travel expenses as part of the contract terms, then the travel expenses are considered recoverable and capitalized as asset. So similarly, if a bonus is paid based on obtaining a contract, it is an incremental cost. But if the bonus is paid based on individual performance only, it is not considered incremental cost. So that's move on to the second type of contract cost, which is cost to fulfill a contract. Okay, this one, the cost incurred to fulfill the obligations of the contract obtained, but before transferring goods to the customers. If the costs incurred are within the scope of another standards, the cost cannot be recognized as asset. The For example, like the MFRS 102 inventories, property, plant and equipment, intangible assets. So costs that incurred under these standards are not cannot be recognized as asset. Okay, or ataupun cannot be qualified for. Okay, so if the cost is not under the standards, it can recognized as asset or qualified for capitalization. Only if these criteria are met as well. Okay, the first one is the cost related directly to a contract or to an anticipated contract. For example, which means the cost must be specifically incurred for that particular contract. For example, direct labor, salaries if employees who provide promised services directly to the customer, or direct materials such as supplies used in providing services to the customers. The second criteria B, the cost generate or enhance resources of the entity, which means the cost should enhance the company's ability to perform under the contract and able to create future economic benefits. The third criteria is the C is the costs are expected to be recovered, which means the recoverable costs. So certain costs shall be recognized as expenses when incurred, not as assets. For example, general and administrative costs unless they are explicitly chargeable to customer under the contract. Maksudnya, if it can generate revenue, it can be recognized as asset juga. Another example is cost of wasted materials or other resources to fulfill the contract, but were not reflected in the price of the contract. So these types of costs cannot be recognized as asset, but as expenses. Okay, let's move on to the amortization. All capitalized costs are amortized on systematic basis from both types of the costs, like from the incremental cost and cost to fulfill a contract. If they're recognized as asset, they should be amortized. And it should be consistent with the timing of the transfer of related goods and services. Okay, I'll give us two examples. The first example would be the amortization over initial contract term. For example, a company incurs 12,000 in sales commission to secure a contract with a customer for 1 year. So they would amortize each month 1,000 ringgit, which means 12,000 divided by 12 months equal to 1,000. They follow the initial term 1 year. So the contract cost should be also amortized over a period longer than the initial contract term, only if the management expects a customer will renew the contract. Okay, the first example was over the initial term. The second example is amortization for contract renewal. For example, a company incurs 24,000 in sales commission for 2 year contract. Let's say there is high likelihood that the customer will renew the contract. So the company will decide to amortize over 3 years. So 24,000 divided 6 months equal to 666 per month, which means they don't follow the initial term of 2 year contract, but they will amortize it for 3 years if the customer expects to renew the contract. With this called aligning with the matching principles, revenue and expenses. Okay, the last one, impairment. Impairment, it's a situation where the fair value of the capitalized asset is below its carrying amount. So the impairment loss is recorded as expenses in profit and loss statement. It is basically the differences between carrying amount and recoverable amount that is recognized as expenses. For example, I would give a simple example. A company enters into a long-term contract with a customer, but later finds out that it is unlikely to collect all of the expected revenues under that contract, maybe due to economic downturn or other factors. So it would perform an impairment test on the related contract asset. If an impairment is identified, the company would recognize the loss for that amount in the current period. But there are also some criteria they should follow before recognizing the impairment. So the first criteria A is the remaining amount of consideration that the entity expects to receive in exchange for the goods. And B, the second criteria, the costs that relate directly to providing those goods and services and have not been recognized as expenses. So overall, there are criteria as well. So the impairment loss is recognized to the extent the carrying amount of the recognized asset exceeds these criteria. So that is all from me. I will pass to the next presenter.
Testing. Okay, testing. Yes. Dengar tak? Okay. Okay, continue. Other revenue issue explain some others issue pertaining to the revenues. So first, SIC Consensus 23 applications of the MLRS 15 on sales of the residential property. This issue use the performance obligation certifies over the times, which means that the revenue recognized occur as the work progress rather than at a single point in time. In the context of residential property sales, this may involve the recognizing revenue as a construction progress or as certain purpose are reached, rather than the recognizing the full revenue at the point of sales. For example, a construction project is in process. When the projects that settle, the revenue baru recognized. Then an entity must consider two things. First, the entity performance does not create an asset with an alternative use to the entity, which means that the entity performance in fulfilling its obligations under the contract result in creations of an asset that could be used for others purpose beside the fulfilling that specific contract. If the entity only serves the specific contract and doesn't have any other purpose, like in the contract just build a house, then the entity only builds a house, does not build other things, that it makes sense to recognize the revenue over the time as a work progress. So B, entity has an enforceable right to payments for performance complete to that the contract is terminated earlier. The entity should have a clear contract stating that have paid for the work that have done so far. Even if the contract end earlier, this ensure that they meet the condition for recognizing the revenue, ensure that they will pay for the work that have already complete. These two conditions are important to assess whether the entity meet both criteria to determine if the revenue should be recognized over the time or at a single point in time. So second, SIC Consensus 27 treatment of land cost. So FRSIC Consensus 27 address how to handle the land cost in the property developments, where both the lands and the property developments are seen as one task. Here what's important, so the first scope. This apply when a property development follow all the rule in MFRS 15 that step before and recognize the revenue over the time based on the estimate total cost. So second, measuring the progress is use a certain method to check how much of the job is complete as outlined in MFRS 15. So now we talk about the land cost. So including the land cost, we should including the land cost in our progress measurements if the buyer gain control over it. They argue that because the buyer can use the land for the various purpose like selling it or use it as a collateral for loan that essentially control it. So the others disagree. They say that we should lift up the land cost because it doesn't directly show the progress of the building the property. They focus on the fact that the cost of land isn't related to the actual work of the development of the property like constructions. So the page 186 in the textbook has explained for the land cost. So next, gift card. When the customer redeem the gift card for the good and service, revenue recognized because the obligation have been certified. After the customer redeem the gift card, the revenue baru boleh recognize. So the next, warranty. Warranty has two types. First, insurance, complying with the agreed upon the specifications. And second, service. Service is additions. So the warranty occur when the customer purchase. So when customer purchase warranty tu, baru ada warranty tu. So the revenue for the sales of the product and the warranty service will be recognized separately when each obligation is satisfied, which means that the revenue tak recognize sama-sama for the warranty and the sales. So insurance typically result in the revenue recognized at the point of sales, while the service warranty involve ongoing obligation to provide the additional service and result in revenue recognitions over the times as those service are delivered. In the simple word, service deliver baru recognize. Next. So non-refundable upfront fee when provide the product in the future, fee would be recognized. So non-refundable upfront fee are payment made by the customer to an entity before receiving any good or service in return. When assessing the refundable upfront fee, the entity need to determine if that relate to a separate performance obligations, which is promised to transfer the good and service to the customer. If the non-refundable upfront fee represent an advance payment for future good and service, the entities does not recognize revenue from the fee immediately. Instead, the revenue is recognized only when the entity provide the future good or service associated with the fee. In other words, the revenue is deferred until the entity fulfill its obligations by delivery the promised good or service to the customer. In a simple words, masa dia bagi goods tu baru recognize. So the next is repurchase agreement. Repurchase agreements have three forms. The first, forward agreement. Forward purchase agreement is a seller agree to repurchase the sold good at a predetermined price and that in the future. This is a contractual obligations and typically does not involve any additional options. If the repurchase option is substantive, the revenue recognized is deferred until the repurchase option expire or is exercised. If the repurchase option is not substantive, the revenue is recognized at the times of sales, provided all others revenue recognized criteria are met. So second, call option agreement. Call option agreement that give the buyer the right but not obligations to buy a specific asset at a predetermined price by a certain date. In a call option repurchase agreement, the sellers retain the right but not obligations to repurchase the good from the customer at a specific price within a certain period of time. The customer has a right to force the seller to repurchase the good at a agreed upon price. So last, put options agreement. In the put options repurchase agreement, the customer retain the right but not obligation to sell the good back to the seller at a specific price within a certain period of time. The seller has the obligation to repurchase the good if the customer exercise this right. So the call option and the put option different in the buyer and the seller. So next is license. Used to transfer the right to use the intellectual property, and the entities must determine the nature of the license. So if the license is a right to access, the revenue recognized over the times. If the license is right to use, the revenue recognized at a single point in times. So for right to access, which means that the IP can be see only. If the license grant the customer the right to access the IP over a period of time, the revenue allocated to the license is recognized over the period. This means that the revenue is recognized gradually as the customer access and benefit from the IP. Sebagai contoh, company access the IP untuk sesiapa access for a year, then bahagi 12 installment, so setiap bulan dia dapat revenue tu boleh recognize. So revenue recognized over the time sebab dia setiap bulan bagi. So right to use means that the customer can use the IP to benefit. If the license grant the customer the right to use the IP at a specific point in time, the revenue allocated to the license is recognized at a point in time. This means that the revenue is recognized once the customer gain the control of the IP and can use it for their benefit. So it's a one-time upfront fee. So next, customer loyalty program, including the point-based program, cashback program, and etc. When a customer make the payment before receiving the good and or service through the loyalty program, the company recognize a contract liability. This means that the company does not recognize the revenue until it's fulfill its obligation by transferring the good or service to the customer. If the company can figure out how much of the reward in the loyalty program the customer likely would not use, they can count as an revenue, as a revenue. This means that they can recognize the money that expect to earn from the part of the program that customer probably will not redeem. So if the customer typically does not use all its revenue or does not use all their reward, the company can say they made some money from those unredeemed reward and count it as an income. Next. So next is the material. Material is provide the customer options for additional goods or service. Given additional service for the customer choose either for free or discounts. Some contract will provide free gift or discounts to customer through the point program, over credit and etc. If the customer need to pay advance, which means that it is a separate performance obligations. If not provide material, right, is entering into an contract treat as a stand-alone selling price. So, for example, a company provide service A and also provide the service B and C as an addition service of B and C. So the customer can through the program to redeem the free and the discount to choose this additional service. So it is qualified to redeem the material right too. For example, T Life at the other buy 10 free one. After you buy 10, you can redeem the free one. So next is renewable options. Provide a right to customer to continue buy addition good or the service under the existing contract. If provide material right, have the option can buy the existing product and the service. In a simple word, kat contract sekarang buy the new good and the service. For example, you subscribe to a streaming service. When you current subscribe end, you have the option to renew it at the same price. The renewable options give you the right to keep enjoying the service without any change. Like Foodpanda, you subscribe at the Panda Pro, masa dah tamat, you tak terus jadi the Panda Pro, so you boleh guna the price yang sama to continue subscribe. These renewable options give you a significant benefit like discounts or special offer is called material right. So Build and Hold. Build and Hold is a company build a customer for a product by retain the possessions for a product until it's delivered at a later date. To recognize the revenue in this scenario, the company need to ensure that control of the product has effectively transferred to the customer. For example, a customer sell the shoe after 6 months baru dapat. When the customer require baru bagi dia. So the revenue recognized pada masa tu. That's all for me. I will pass the present to the next.
Okay, next I will explain about disclosure requirement. These are the presentation of revenue in a company's financial statement. First is contract asset. Contract asset is an entity's right to consideration for goods or services that have transferred. However, the right is conditional on something other than passage of time. Apa yang saya faham untuk contract asset ni
kita buat something dulu, baru kita terima bayaran. Maksudnya kan contoh dia kita kontraktor, bila kita nak bina rumah, dalam kontrak tu dia kata okay, dia akan bayar kita 100,000 tapi berperingkat. Contoh peringkat pertama, kalau kita buat tapak, kita dapat 30,000. So maksudnya kalau kita buat tapak tu dulu, baru kita receive 30,000 tu. So maksudnya katakan kalau kita tak terima 30,000 tu, maksud kita tak boleh buat next step. So contoh stage 2, bila kita buat dinding, kita dapat 40,000. Itu apa yang saya faham lah untuk contract asset tu. Kalau contract liability, contract liability is an entity's obligation to transfer goods or services to a customer for which the entity has received consideration or an amount of consideration is due from the customer. Kalau contract liability ni, apa yang saya faham, kita dapat duit tu dulu, baru kita deliver barang tu dekat customer. Contoh kalau macam customer dia subscribe untuk subscription of box kat kita kan untuk selama 6 bulan. So dia bayar dulu upfront duit tu maybe RM1,000 dulu dia bayar untuk 6 bulan tu untuk kita deliver box. So dia bayar dulu 100,000 tu kat kita. Dan untuk selama 6 bulan tu kita kena deliver box tu. Kiranya kita dapat duit dulu baru kita deliver barang tu kat customer tu untuk contract liability. Kalau bad debts, a bad debt expense is recognized when a receivable is no longer collectible because a customer is unable to fulfill the obligation to pay an outstanding debt due to bankruptcy or other financial problems. So ni macam kita tahu terjadinya bad debts bila kita punya hutang tu tak dapat nak bayar balik hutang yang dia hutangan kita. Dia lari ke, dia bankrupt ke, mati ke. So yang hutang-hutang dia tu semua kita akan declare as bad debts. So ini adalah disclosure requirements in MFRS 15. First, contract with customer. Contract with customer ni, apa yang saya faham, kita kena disclose separate revenue separate revenue yang kita buat contract daripada dengan customer kita dengan revenue lain. Kita kena disclose dia. Dia recognize revenue when the promised goods or services are transferred to the customer and the customer obtains control. So tapi kalau kita dah disclose dalam financial statement kita tak payah disclose lagi sekali lah. Okay. Next, significant judgment disclosure. Untuk significant judgment ni, the disclosure should include the timing of satisfaction of performance obligation. Maksud kat sini, maksudnya kita kena bagi tahu macam bila kita delivery barang tu kat customer, kita ada overtime ke apa ke. Betul, the transaction price and the amounts allocated to performance obligation. Ni kita explain berapa total price contract tu dengan macam mana kita assign price tu untuk different obligation. Seterusnya, description of significant judgment. Yang ni kita outline key bila kita buat bila kita recognize revenue. Masuk kat sini ni apa tadi? Contoh kalau kita ada web development company, kita recognize revenue bila kita siapkan website tu. So yang price of allocation tu katakan dalam kontrak dia tulis 10,000 untuk buat website ni lah. So kita allocate 6,000 untuk design, 4,000 untuk coding. Itu untuk yang yang second bullet tu, yang the transaction price and the amount of allocated. So yang untuk significant judgment ni, maksud kita decide nak recognize revenue tu based on project milestone atau estimating the percentage of complete work. Maksudnya kita akan recognize revenue yang kita dapat yang 10,000 tu bila kita dah siap kita punya website tu. Lepas tu the method used to recognize revenue. Example, a description of the output methods or input methods used and how those methods are applied. Next, seterusnya an explanation as to why the methods used provide a faithful depiction of the transaction. Kan kat sini dia kata kita kena disclose method kan. Contoh kalau kita buat web development company tadi, kita mungkin output method kita recognize revenue tu when specific parts of the project siap. Contohnya bila kita dah siap homepage, kita recognize revenue tu. Lepas tu kalau input method, kita recognize revenue tu based on berapa duration hours yang team kita guna untuk siapkan website tu. Lepas tu justification tu macam kita kena explain lah kenapa input method kita tu dia berkesan untuk try untuk reflect project tu lah, kenapa method tu sesuai untuk guna macam tu. Lepas tu asset recognized from the cost to obtain or fulfill a contract with a customer. The disclosure should include the judgment required to determine the amount of the cost incurred to obtain or fulfill a contract with a customer, the method used for amortization, the closing balances of these assets by main category, and the amount of amortization and impairment recognized during the period. Untuk yang ni, contoh kalau kita run a marketing agency, judgment of cost tu, contoh kita determine sales commission dengan initial project setup fees tu penting untuk fulfill. Lepas tu amortization method, contoh kita buat kontrak tu last untuk 2 tahun. So kita divide cost yang kita terima sama rata lah untuk 24 bulan. Lepas tu untuk closing balance, katakan kan kita kata tadi yang cost yang penting untuk fulfill contract ni adalah sales commission dengan initial project. So katakan untuk sales commission tu 10,000, untuk project setup fees tu 5,000. So kita kena tengok lah duration sepanjang period untuk sepanjang 24 bulan tu berapa banyak cost yang dah amortize. So kita kena record balance dia. Kalau ada impairment pun kita kena record. Contoh impairment kalau contract tu tiba-tiba kena cancel, kita record, kena disclose. Last, other required disclosure. Policy decisions including time value of money and cost to obtain a contract dengan contract cost. Time value of money ni kita nak tengok long term contract di mana bayaran tu dibuat. Kita kena explain revenue kita untuk untuk reflect future payment. Kalau cost obtain contract tu macam kita describe sales commission yang kita bayar kat kita punya team tu recognize as asset. Kalau contract cost tu kita kita outline kan types of cost yang kita guna untuk fulfill contract tu, dan amount cost tadi tu kita kena tulis, dan maksudnya dalam cost-cost yang kita guna tu maksudnya mana satu recognize as asset and mana satu duit kita recognize as expenses. Kenapa kita nak kena disclose semua ni? Sebab nak help financial statement users ni lebih faham macam mana kita handle kita punya dengan macam mana kita handle untuk transparency, accountability, macam mana kita dengan customer, macam apa yang kita buat guna apa yang kita guna macam mana kita guna duit tu untuk buat something apa maksudnya semua dah disclose lah, maksudnya orang boleh tahu macam stakeholder ke apa ke lepas tu conclusion dia the new MFRS 15 standard is principle-based and aligns with existing revenue requirements but offers more detailed application guidance. While some entities may see minimal impact, others, especially those with limited guidance under current standards, will face significant changes. MFRS 15 also covers accounting treatment for items beyond traditional revenue, including costs related to contract acquisition and fulfillment, as well as the sale of specific non-financial assets. That's all from our group. Thank you.
Okay, thank you for your presentation. Okay, sebelum tu saya nak tanya, kita nak proceed dengan satu group lagi yang apa? Management.
Nak sah?
Kita buat esok je. Which means that satu group tu present kejap, lepas tu saya akan bagi ni lah punya tips untuk final lah. Maknanya dia esok kita ada kelas face to face lah. Boleh?
Boleh tak? Hari ni je.
Hari ni je? Awak nak proceed terus dengan hari ni? Tak lambat ke? Okey je, saya okey je.
Boleh je.
Boleh je? Orang lain?
Okey je sir, boleh je.
Okey. Kalau boleh, okey, awak proceed je lah. Sebabnya yang dua topik tadi dengan topik yang last ni, ni management ni masuk final. So, pay attention sikit lah. Okay, proceed lah. Kalau nak proceed.
Assalamualaikum warahmatullahi wabarakatuh, and hi everyone. Okay, so our group we present impairment of GOODWILL. Okay, my name is Ilmi Zahira and this is our team. Okay, so the first one, definition. Okay, GOODWILL payment occurs when the carrying amount of GOODWILL on the company balance sheet exceeds its fair value. GOODWILL is an intangible asset that arises when a company acquires another company for a price higher than the fair value of its identifiable net asset. Over time, if the acquired business underperforms or market conditions change, the value of goodwill might decline and necessitate an impairment. Okay, so as I said before, goodwill is an intangible asset recorded when a company purchases another company for more than the fair value of its net identifiable asset. Okay, so the example of goodwill is brand name, customer base, good customer relation, good employee relation, and patent or proprietary technology. Okay, so this is the formula of impairment loss, carrying amount of goodwill minus fair value of goodwill. Okay. Okay, so for implication impairment of goodwill of financial statement, the first one is reduced net income and earning per share.
The impairment loss is an expense that reduces the net income and the EPS of the entity. This affects the profitability and the return on equity of the entity. Okay, the second one is reduce total asset and equity. The impairment loss also reduce the total asset and the equity of the entity in the balance sheet. This affect the liquidity and the solvency of the entity. Okay, the last one is change financial ratio. Okay, the impairment loss affect various financial ratios that are used to measure the financial performance and position of the entity. For example, the impairment loss will lower the asset turnover, which measure how efficiently the entity use its asset to generate revenue. It will also lower the current ratio and the quick ratio, which measure the ability of the entity to pay its short-term obligations. It will also increase the debt to equity ratio and debt to asset ratio, which measure the leverage and the risk of the entity. Okay, next.
Hello, I am Emma Jasmine and I will present about why impairment happens. Several factors can lead to goodwill impairment. An economic downturn such as recession can significantly impact the performance of an acquired business. Industry changes, including increased competition or technological advancements, can also reduce the value of goodwill. Internal challenges like poor management decision, operational inefficiencies, or unsuccessful integration of the acquired business are common causes. Regulatory changes that alter the business environment and changes in market conditions or consumer preferences can also lead to a decline in acquired companies' performance. Companies are required to test goodwill for impairment at least annually or whenever there's an indication of potential impairment. The process starts with a qualitative assessment where companies evaluate factors like macroeconomic condition, industry and market consideration, cost factors, financial performance and other relevant events. If these factors suggest that the fair value of the reporting unit is slightly less than its carrying amount, a quantitative assessment is performed. In this assessment, the fair value of the reporting unit is compared to its carrying amount. If the carrying amount exceeds the fair value, the difference is recorded as a goodwill impairment loss. To determine the fair value of a reporting unit, companies commonly use valuation techniques such as the discounted cash flow analysis and market approach. The discounted cash flow analysis project future cash flow and discount them to their present value using an appropriate discount rate. The market approach use market multiples derived from comparable public companies or recent transactions involving similar businesses.
Now I'm going to give a quick overview of how we handle the impairment of goodwill in Malaysia. In Malaysia, the impairment of goodwill is primarily governed by the MFRF, Malaysia Financial Reporting Standard, which are largely governed with the International Financial Reporting Standard, IFRS. The relevant standard for impairment of goodwill is IMPAIRMENT 136, impairment of asset, which align with the principle outlined in IFRS 3, revive business combinations, and IES 36, impairment of asset. So the key standard for us is IMPAIRMENT 136, which deals with the impairment of asset. Next slide. Here are the key requirements. First, annual testing. We have to perform an annual impairment test for goodwill and other tangible assets with indefinite useful life. If there are any sign of trouble, we do this test more often. The impairment test itself is a two-step process. Step 1, we compare the carrying amount of asset to its recoverable amount. If the carrying amount is higher, we move to the step 2 by calculate the impairment loss. First, we reduce the goodwill to zero and any remaining loss is allocated to the other assets. To figure out the recoverable amount, we take the higher of its fair value minus disposal cost or its value in use. which we estimate using market price or discounted cash flow analysis. For disclosure, we also need to be transparent about our process. This means disclosing detailed information about the impairment test, the key assumptions we made, and any impairment loss are recognized. In reversal, it is important to note that an impairment loss is recognized for goodwill because it can be reversed. For additional guidance in goodwill, MIA or Malaysia Institution of Accounts provide further guidance. It's crucial to use information, professional judgment, and seek expertise, especially in complex situations.
Next, I am Najia. I will talk about the case study. This is a Kraft Heinz company. The industry is food and beverages. It was founded in 2015 through merger of Kraft Foods Group and H.J. Heinz Group that was arranged by Berkshire Hathaway and 3G Capitals, who will also become a major shareholders. The objective of the merger aimed to create a global food and beverage powerhouse by combining two iconic brands, leveraging their complementary strengths and realizing cost synergy. Okay, history before the merger, Kraft Foods Group ni actually separated from Kraft Foods Incorporation in 2012. In early 20th century, they are known of products like Kraft cheese and also Oscar Mayer meats. For H.J. Heinz company ni pula, dia founded in 1869 by Henry John Heinz. The company became famous for its ketchup and other condiments. Okay. Events that leading to impairment. In 2018, Kraft Heinz will experience several challenges, which is declining sales due to increased competition and changing consumer preference toward healthy options. Such that there are the cost pressures, which is high cost of raw materials and packaging. Also failed innovation, that the efforts to innovate and introduce new product didn't yield the expected result. And lastly, the strategic misstep, which is cost cutting strategies that was implemented by 3G Capital, were criticized for negatively impacting brand investment and product quantity. Okay, for case study ni dia buat dua assessment yang tadi tu, which is qualitative and then quantitative assessment. In qualitative ni, dia review macroeconomic conditions, industry trends and internal financial performance. Indicator of financial potential impairments include like declining stock price, lower than expected operating performance and also negative market trends. In that quantitative assessment, they use discounted cash flow, which is the method to estimate the fair value of its reporting unit. Dalam method ni dia guna analisis yang berkaitan dengan revenue growth rate, which is projected lower growth due to market condition and internal challenges. Dia pun tengok analisis berdasarkan operating margins that adjusted downward to reflect increased cost and competitive pressures. Dia tengok discount rate, dia tengok terminal growth rate juga. The result from the testing, fair value of several reporting units lower than carrying amount and recorded a goodwill impairment charge of 15.4 billion. From here, Kraft Heinz balance sheets ni the reported as goodwill was reduced for 15.4 billion, which is decreasing the total asset. Lepas tu dalam income statement of Kraft Heinz ni juga dia cakap the impairment charge was recorded as an expense, resulting in a substantial net loss for the quarter and the fiscal year. Kraft Heinz also disclose that dia also disclose their financial statement ni followed the regulatory filings in explaining the impairment test process, key assumptions and also resulting charge. From this case, there are impact for investors' perception that that related with the stock price. Dia cakap stock price drop sebab investors punya perception tu, and also impact the second impact is company's credit rating ni dia jadi downgraded. So to conclude the case study, Grafan underscores the importance of realistic valuation and strategic management. It highlights the challenges company face when market condition change and strategic assumption do not hold. That is all. Thank you.
Okay, thank you for your presentation. Okay, for this topic, actually saya tak prepare pun sebenarnya. Saya pun tak macam still lagi blur. So, dan topik ni macam tak masuk final pun. Okay, ada apa-apa nak tanya pasal ni, presentation ni? Tak ada. Okay, kalau tak ada, we end our session for presentation. And tapi sebelum tu, for tomorrow, kita akan buat kelas face to face lah. So, I hope that you can attend it because saya nak bagi tips untuk your final lah. So, untuk awak punya carry mark, saya tengah masukkan dalam ni lah. So, awak baru habis presentation ni. So, mungkin hari Khamis petang tu saya akan bagilah awak punya carry mark. So, I hope kita jumpa esok. Kat kelas esok dekat isi 18 Okay. Okay, thank you semua.